Okay, welcome everyone. Thanks for joining us. This podcast is for informational purposes only. It should not be relied upon as a basis for investment decisions. Before making any investment decisions, you should seek independent advice from a legal, tax, and regulatory perspective. In particular, you should seek out a licensed fund advisor in regards to suitability of the investment product and we're talking that we are mentioned on this show. We are also not representatives of eToro, and yeah, the opinions are strictly our own. I think that should cover it.
Okay, thanks, Zach. So welcome everybody to this second edition of our Singapore eToro Investment Forum, where we talk about lots of different areas of the economy and eToro in general. Just before we get started, I just wanted to reintroduce some of the panel, and we also have a new panel member today as well, Maverick. So I'll go through them. So I'm Stephen, and my eToro username is Bees84. And then Amar Singh. And then Zach, which is known as Fund Manager Zach on eToro. Simone Rizzetto. And Maverick. And because we've introduced ourselves before in the last episode, so if you want to hear a bit more about us, you can see our last episode. But I would like Maverick, just as his first time on the forum, just to introduce himself and explain a little bit about himself.
Hi, my name is Maverick. In the eToro, my nickname is Nathan Dimitri, and I'm a real estate agent in Malaysia. Currently, I'm based in Malaysia, KL. So, and I started invest from April 2020. Yeah, and since then, and then after like 2-3 months, I applied for the popular investor. Yeah, then until now, yeah.
Okay, excellent. Well, really great to have you on board, Maverick, and it's good to we're all based in Singapore, so it's good to have some Malaysia perspective as well. So welcome.
Yeah, we are neighbors.
Okay, so I thought we'd kick things off today and have a little bit of a brief summary about what happened in the first half of 2021. As I think everyone can agree, it's been very eventful. Very up and down, but I wanted to put over to this panel some questions, and then we can talk about a little bit about what happened in 2021. Simeone, do you want to talk about some kind of key themes that appeared in 2021?
So I think this is the first half of the year was a period of great opportunities because as you mentioned, there has been a lot of volatilities. I've been affected certain class of companies, mostly growth companies, because the interest rates usually, when the interest rates goes up, usually stock price of growth company tend to decrease a lot, and especially micro cap companies or the one that are working on projects, long-term projects, and still have a very low revenue right now, have been heavily affected by these events. So that was a great opportunity for me and my co-peers as well to open new positions in such a stocks, especially biotechs that have been heavily affected by this. On the other hand, we have seen more established companies, more mature companies that have been doing pretty well during that time. Pharmaceutical companies like Roche and Merck in my portfolio have been performing quite decently. For tech stocks, I have quite a big exposure, some big tech stocks in my portfolio that we have seen some of them performing very good, others a bit less, also been affected by fear of inflations and interest rates. But overall, we have seen very big winners or some big techs like NVIDIA, which went up 50% from even more than 50% from the beginning of the year, which is very good for for NVIDIA. Let's say what is gonna happen next. Okay. So yeah, so this is what happened to my stocks mostly in my portfolio.
Quick question there, Simone, just on a follow-up to that. So you mentioned about some of your good tech stock wins in the first half of the year. Did you have to adjust your portfolio in any way when you obviously heard the fears about increased interest rates, etc.? Did you do any changing of your portfolio?
I did. So basically, when in February, when there was still the fear was starting, so the interest rates were starting to increase, I still had 20% cash in my portfolio. And as the price starts to drop, I basically bought a lot of stocks. Now I'm like 10% cash only, and I mostly invested into growth stocks. So I increased the risk of my portfolio basically because you know the rule: be fearless when other people's
greedy.
Yeah, greedy.
Okay.
When other people are fear.
So did anyone take a move in the market in the beginning of 2021, obviously when tech stocks were doing well, but there was this fear of increased interest rates? Did anyone change their portfolio to add, you know, financial services or insurance companies or something that was going to, you know, prosper from higher interest rates? Did anyone take that move?
No, I bought the dip for the crypto.
Okay.
Yeah.
I opened a very small position on Berkshire.
On Berkshire Hathaway.
Yeah, a very small one, just to balance, keep my portfolio a little bit balanced, to not be like overexposed toward biotechs only or or growth stocks.
Yeah, so I personally added some financial services stocks into my portfolio, kind of April, May time. And I added Ali Financial, Aetna. Insurance companies tend to do very well in times of increased interest rates. So I added a few financial services companies into my portfolio for a little bit of robustness if we had any tech weakness.
So do you think it was better to invest in like more established financial companies like big banks, or more like fintech companies like you mentioned? You said Alipay, right?
No. So yeah, I think so. I said insurance companies is another way that you can play the interest rates in your portfolio. So yeah, I added some financial services companies and also some insurance companies, and they did well actually in the you know, between kind of March to kind of June period. They did quite well, so I think it just adds an extra layer of robustness to your portfolio.
And are you planning to keep them, or now you expect a rotations again out of financial service into growth maybe?
I plan to keep them only because they are only a certain proportion of my portfolio. So it just adds a little bit of diversification to my portfolio to, you know, shelter yourself from a number of different scenarios. Yeah. What about you, Zach? Do you have any thoughts on the first 6 months of 2021, or how you arranged your portfolio to deal with that?
Yeah, so I basically bought oil because I mean, it was easy in December because everyone was like EV, so oil was like really cheap. So I just got some oil. I sold it out recently because I think, I don't know about you guys, but I personally see like CPI numbers and I'm not convinced it's going to be a runaway inflation anymore. I kind of think it's going to be transitory. The last CPI number was like 0.6%, so nothing major in that department. Yeah, so I don't know how the rest of you are seeing it, but I don't think it's going to be, you know, it's going to be a runaway inflation like a 1920s, 1930s.
Yeah, I think it's interesting. It's an interesting subject to do with oil, and I'm actually of the thinking that the oil price is going to go much higher, and I think as COVID starts to recover and there's going to be more need for energy requirements, I think that will go up, and I think the dollar weakness as well will cause the oil price to go up as well. I think the CPI numbers are a little bit of an illusion. Because if I'm right, I think the CPI numbers don't include energy and food costs. Yeah, I think the CPI figures are a little bit.
Yeah, I think the inflation was mostly into used cars. So there were like a few categories that was pushing inflation up. And that one of that was used car, and another one, I don't remember which one, but like energy, food were all pretty stable. So there was not inflations into those classes, which is kind of expected because we didn't reopen yet. So we might see some inflation in those categories after we are gonna start traveling again. But until that is not going to happen, I don't see how we're going to see large inflation in food and energy.
The one thing I would say about that is I keep thinking about it as well in terms of inflation. And obviously this is the party line from the Fed, right? That, okay, inflation is higher than usual, but it is transitionary, right? But what I sometimes think is, how is it going to be possible to pull that back? So if I just give you a really silly example of, let's say Chipotle, the restaurant brand, and the price of the avocados go up, right? So they have to pass on that cost to the consumer. Yeah, they pass on that cost to the consumer. So it means the price goes up of the sandwich or whatever it might be, of the taco. Then after that, how do they say, okay, those price increases were transitionary, we're going to put the price down? The not is, so is what I'm trying to say is it's very difficult, I think, once you have inflation, to start dialing back those costs, because I think once they're in place, they're very difficult to change.
I agree that, but the problem, I think the fear is that inflation will keep growing. So if the avocado cost will grow, let's say next month, and then it stops growing, I don't think this is too much of a problem. The problem is if it grows next month, if it keeps growing the months after, and so on, then that case could be a problem. Probably we don't even want to bring costs down, at least for food. But for other categories, you can bring the cost down. Like, like many products, a lot of works can be made more efficient by AI, for instance. AI is a deflationary force because it will make everything more efficient and you can bring the cost down. So depends by what you're looking at, what kind of classes of products you're looking at.
And I think what they will do as well is they will look for if inflation is starting to run out of control, they will start to look at increasing the interest rates to try and offset that slightly. But they've obviously also got to be very careful that they don't increase the interest rates and tank the market. So it's going to be a fine line. Yeah. Amar, is there anything you want to say on the first half of 2021, or anything that you've noticed that you want to bring up?
I think we touched on some of the issues like the transition between growth stocks to value stocks. And then, of course, there was this big crypto crash as well. So generally, I don't tend to watch macro trends that closely, because when I invest in a company, I tend to invest in it for many years, 5 years or so. So generally a few months will not change the thesis that much. But I'm keeping an eye out on certain stocks or assets. Like I am actually keeping an eye out on crypto. If crypto drops further, I might be keen on picking up some crypto.
Yeah.
I'm quite heavily invested in big tech. So my US big tech did well in the first half, but the China big tech has not done so well so far. But maybe in the second half that can change. So let's see how that goes. I'll just say on oil, my long-term thesis on oil is that it's going to go down because the world's going to transition to electric cars. So this is something that Cathy Wood of ARK Invest also talks about, that if cars become electric, the demand for oil is going to go down. So I think the demand for oil will go down as well.
But I think that depends. I agree with you on the long term, but I think it depends on the time period that we're talking. So I think, as Zach mentioned a little bit earlier, because everybody's looking at the maybe the more overcrowded play of solar and renewable energies, there may be a short-term opportunity there. But yeah, I agree with you long term that it's looking more and more renewable.
Yeah, no, short-term opportunities can be very risky because it only will materialize if we are going to have a reopening sooner rather than later. And if we will delay of another year international travels, then your opportunities might be gone. What do you think?
Yeah, I agree with you. I mean, oil is a simple supply and demand equation. So if the demand is lower, then it's going to have a big effect on the oil price, plus all the oil companies and all the oil services companies. So yeah, you're right. But I think in terms of COVID, and actually as a good segue into a COVID conversation, that I think the recovery from COVID is going to be very uneven in the world. I think we're going to have pockets of recovery and then pockets of variants and pockets of increased number of cases. So yeah, I don't think it's actually really possible at the moment to actually try to forecast what the demand is going to be while it's so sporadic.
But I'll say, I mean, I was just looking at Southwestern now that we're talking about the reopen trade, right? Southwestern's more than recovered from what it was in 2020, right? Is this really a reopening trade? I mean, we're not flying yet. I mean, Singapore is barely, we're not vaccinated quite yet, and we're a small country. Japan shutting down, Thailand is, you know, everybody's in trouble. Indonesia is, I think, pretty bad. Maverick, I think where you're at is also pretty bad. So, you know, we're all like, where's the reopening? Why is stocks recovering? I don't think this is a logical market in that sense of the word.
Yeah, well, I think it's a bit different because, yeah, I think the problem with flying is more to do with, I think where they're getting hit hardest is corporate flying because people aren't going on business trips around, right? Yeah. I believe there's been a decent recovery in US in terms of domestic travel around, but I don't think international travel is anywhere near the kind of passengers that they were pre-COVID.
I think some investors are trying to look ahead of what is going to happen in the next few months. So probably right now they believe that international travels will be back to normal very, very soon. That's what they believe, and they are trying to anticipate other investors. It's a risky move because it may not be true.
I think some things have returned to normal, like the NBA finals. Now they have live crowds. I've been watching that. The Euro finals, we were talking about that earlier. So they have crowds as well. So some things are returning back to normal, but I think it might take another year or so for everything to really return to normal, where, you know, we can start traveling all over the world again without restrictions.
Yeah, I think especially in Europe. So I saw recently that they announced that they've set up something called a COVID certificate for 15 nations in Europe, which would allow people to be able to travel between the different nations if they were vaccinated. So it's basically almost like a vaccination passport around Europe. I think there'll be some initiatives like this to try and get people people to travel. And I think there's going to be different regulations for people that are vaccinated and people that aren't vaccinated, like sporting crowds, etc. So
yeah. I also thought a bit more of why there is such a big high evaluation for recovery stocks. I think so. Everybody is waiting to start traveling again. So as soon as we can start traveling, there will be a huge demand in travelings and hotels and everything, and that will push costs higher. So the revenue of these airlines, of hotels, or everything's in this traveling market will be much higher than the one it was in 2019.
Yeah,
so people want to get that extra revenues, probably.
Yeah, I agree with that. Has anyone, while we're talking about COVID or COVID recovery plays, has anyone actually bought any stocks that kind of play on the COVID recovery theme? I leave that as an open question, but I can put it over to someone if they want it, or I can take it myself.
I'm not touching that. You go for it, man.
Give us your answer.
Yeah, so I've done a few COVID recovery plays actually, because I do think that there's going to be pockets of opportunity out there. There is still a lot of risk, but I've done a couple of COVID recovery plays. One is a theme park actually in the US. US is opened up massively compared with other countries around the world. There's no requirements at the moment to wear masks indoors, etc. There's obviously some threats with the Delta variant, but right now, the company that I actually invested in was a company called Cedar Fair, and they're a big group of theme parks in the US. And they were closed for much of 2020. And they obviously had a big crash in price. But they've since because theme parks work in seasons, they've since reopened in July. You know, they're seeing quite good numbers entering their parks again, and all the parks are open again. So I think there are some areas of pockets of opportunity. I also invested in a Sichuan hot pot restaurant called Haidilao, which is very popular in China. And again, people are starting to go out and eat and trying to have these, you know, family-friendly environments. So, and actually, that's kind of doing quite well as well. So, yeah, I think there are pockets of opportunity that we can potentially play, but there are risks involved too.
Yeah, I think so. You've done well in investing in a theme park. You said it was like a park in US, right?
Yeah.
So because that one, it's usually outdoor, and outdoors seems to be one of those areas that people will be more likely to be allowed to start going again without masks also. So everything that is outdoor could be a good bet for the recovery, because even if we are going backward, that one may stay open. Instead, restaurants could be more risky because, you know, that is very place with a very high risk of spreading the virus, probably much higher than outdoor parts.
Yeah, I thought that the Cedar Fair trade was actually quite good, because I think places like Disneyland, for example, they rely a lot on international people coming from around the world to Disneyland. Whereas places like Cedar Fair, it's obviously an amusement park, but they're going to get majority of their business from domestic travel throughout the US, which I think is going to be a lot less affected than international travel. So yeah, it's trades like that that's worth thinking about. Yeah.
So for all of you following us at home, the stock is Cedar Fair. It's ticker FUN on fund on eToro. And the other one he was talking about is Haidilao. Haidilao is, let's see.
I forgot the number.
06862.HK, Haidilao.
Yes.
Yeah.
Yes, it just popped 10% yesterday, actually. So
oh, really?
Yeah.
It's doing really well in your portfolio, man. It's like 9.24 up. So
yeah.
Well done there.
Cool.
Yeah, fun is
anything-
definitely going on my watch list. I'm gonna watch it.
We all want to have fun. I actually have a post on the pin post if anyone wants to read about my analysis. Yeah. Anything anybody wants to talk about in terms of COVID before we move on to the next subject?
Maybe I'll just say, do you think the stay-at-home trends will stick once COVID subsides? Like, for example, video games, or maybe at-home fitness, or telehealth, things like, or e-commerce. Do you think these trends will stick? These trends that were helped by COVID to a certain extent, do you think they will stick once COVID subsides? It's open to anyone.
I'd like to put that question to Maverick because I'd like to get Maverick involved in the conversation. Is there anything you want to say on that, Maverick?
Yeah, one stock I own is Peloton. Yeah, I think it's kind of a trend. So I think even after open up, it will still go very high. I mean, it will still have a lot of profit. Yeah.
What do you like about Peloton, Maverick?
Peloton, I did some study. I think it's in the West. It's like the US and the UK. It's kind of like a trend. Like when I have this bike, this Peloton, it's kind of trendy. Then I can show to my friends that I have this latest
TikTok videos.
Yeah, so it's kind of a new trend. Yeah, I think it's here to stay. Yeah.
Okay, so Peloton is PTON, and honestly, this is the first time hearing about this stock. So
oh, really?
yeah, I'm a dumbass. I'm sorry.
Peloton's a really interesting one actually, because it was one of those stocks, Zach, which obviously when COVID first hit, it was one of those stocks that everyone was drawn to. It was a real kind of COVID play because everyone was stuck indoors, etc. I don't know. I guess my general thoughts on these is I think they're there to stay, Amar, these types of stocks. But I think that they will be there to stay, but I don't think they will be as, like everybody's going to be just using them when things start to open up again. I think we get a bit euphoric when things are happening and there's tailwinds towards certain like brands. It was the same with Zoom. Everybody was talking about Zoom when the lockdown started. And yes, and here we are, we're still talking on Zoom now. So it still has a good use case, but there is also going to be people that want to live in the real world again. So I think there's got a good future, but I think also you need to taper your expectations that the whole world is going to change overnight.
I think so. I also agree that this will slow down a little bit, but this is the trend that started. It's going in only one direction, that we will always do more of these things, like more of video calls, more of buying groceries online.
Yeah.
Also, during COVID, the investments that companies made into these technologies was huge, and the quality of the service they provide and the quality of technology increased a lot. So now we can have a very smooth video call on Zoom. 2 years ago, it was not that smooth. It was a bit more, you see pixels and the video calls and some things like this. Audio was not clear, but now it's perfect. And also delivery for like grocery or whatever.
Drones.
Even without drones, now it gets a lot more efficient than what it was before.
Yeah.
So now it's, do you want to go back and go yourself to the supermarket and buy grocery yourself when you can just have it delivered at home? And it's going to be much more efficient. And so I think so many of the habits that I started during COVID will remain. obviously I want to go out, but I think most of it will remain.
Yeah, the way I see it actually is I see it like an adoption curve, if you put it that way. So I think what COVID did was accelerate a trend that was already happening, but it sped it up a few years, right? And I think these companies have come to prominence and they're going to grow a lot quicker. But it's not going to happen overnight. But I agree, the trends are there and they're likely to go up over the long term.
Yeah, I'm still of the opinion that people are gonna move out of cities, man. They're still gonna move into smaller towns. I keep that thesis, and yeah, it's not doing well in my portfolio, but it's still my thesis. We'll see.
You could. I think you could be right though, because not many people are working from offices now. And not many people are going and having physical meetings.
Yeah.
So
the problem with that
city.
The problem with that is that companies still wants to have, at least you can work from home, but at least once a week, we want you to come to office and communicate with other. And it's not so easy to do that if you are far away from the city. It's not that you can just go anywhere and work from, I don't know.
I think it depends on the role. It depends on the type of job you have. The ones that are the really remote jobs where you don't actually need to have many individual meetings, there's actually a case that you don't even need to be in the same country.
Yeah. I'm of that view as well. I mean, I'm in development, right? Developers don't need to meet, man. They can just do everything online. They live online anyway, so no difference to them. I think for Simone, it's going to be really hard because you have to work in the lab, so that's not happening.
No, I don't work in the lab, but still, even without, I mostly do data analysis stuff. So the thing is, we still want to meet together for brainstorming. And also, some business meetings could be a lot more fluent if you can meet person to person.
Yeah, that's true.
Now people got used to have video calls, but if you want to make a deal, you may want to do it like when you meet for real. But
definitely not all industries. I think some industries and some roles, like Steven said.
Depends. Some people are a little bit old school and they want to change their mentality. Others are like,
yeah. And I think there's a risk as well, right? That in those jobs that you don't need to be physically present, there's actually a real risk that a lot of those jobs go out to countries with lower salaries and get outsourced for cost cutting measures. So yeah, that could potentially happen too. Okay, all right, that was a really interesting first segment. So I thought we would now move on and talk a bit about what's been happening in crypto over the last 2 months since our last meeting. It has been extremely volatile. But I just wanted to go over to you, Zach, and just ask you some questions about really what's been happening the last couple of months. So I think one of the big subjects that has caught everybody's attention is the increased scrutiny on regulations in China around crypto, but Bitcoin mining in particular. Could you just give us a bit of an overall summary of what's happening to do with the regulations in China around Bitcoin mining and some of the effects that it might be having on the market?
Yeah, so for viewers who don't know me, I work in crypto. I love crypto. I love blockchain. The miners are definitely selling. I can tell you that for a fact. In fact, it's not new that they're clamping down. In fact, China has very strong capital controls, and they never wanted Bitcoin in the first place because capital outflows. But what we're seeing is that in tier 1 cities, there's a lot of shutdowns. Tier 2, there's some shutdowns. Tier 3, there's less enforcement. And I don't know how long that will be true for. They may start enforcing a bit stronger. But for now, it's determined as illegal. But can they clamp everybody down? The mining pools don't show that. They still show that there are Chinese miners still operating. So if you go to bitcoin.com, you can actually see which memory pools are which mining pools are which countries they're from, and China's still active. So to say that they are fully shut down is not accurate.
I've heard a figure of about 90%. I'm not sure how accurate it is, but I've heard a figure that 90% of the Chinese hash rate went off.
I think that was temporary. I don't think it's that anymore. It's closer to less than half of that, I think.
Okay.
Yeah, I would have to look at the numbers like completely to give you a good sense. But when I was looking at it like 2-3 days ago, there's still some mines operating.
Okay. Yeah. And yeah, it's a really interesting subject. And I think I don't know if Zach agrees with me, but I think it's a lot of the reason why obviously there was a lot of fear in the market when you know, a large country such as China starts to clamp down and have scrutiny on what's happening in crypto in general. But I think a lot of the other reason for the selling pressure is probably to do with the miners actually selling off you know, amounts of their Bitcoin, because from what I've heard is a lot of the Chinese miners have actually started moving out of the country and moving their equipment over to countries such as Kazakhstan and US in North America. And obviously this is a huge cost for them, right? To have a mining facility in China and then have to move all of their equipment over to another country. So there's huge capex costs. And what do the miners have? The miners have Bitcoin, right? That's how they keep liquid. So I think some of the selling pressure has been the Chinese miners actually selling some of their Bitcoin. But obviously the massive amount of media coverage and the news articles has also led to sentiment getting a little bit worse, which scares a lot of the new speculators who've come into the market within the last kind of 6 to 12 months and caused issues. Yeah. What do you think, Zach?
So definitely they are selling their mining equipment. So if you look at the top of the line Bitcoin miner, it's called a S19 by Bitmain, right? The Bitmain miners used to sell for 20 over thousand. Now you can get one for about 7 or 8. So it's a lot cheaper. It's not a simple operation to move a Bitcoin mine, unfortunately. No. It's not at all. It's a lot of refactoring, a lot of, you can imagine the standards are different, right? It's China, even just electrical plugs and all that. There's a lot of infrastructure involved. So it'll be interesting to see if they really do move and how fast they can get it back up. That's very interesting to me. And I don't know about you guys, but moving my mine to Kazakhstan or something, that doesn't sound like, you know, a very safe endeavor either. So it's interesting, but we'll see.
Yeah, and I think I actually, in a way, I think long term it's actually a good thing, and I'll explain my thesis on that because yes, it did cause a drop off in the hash rate, and it did cause a lot of people to sell Bitcoin. But I think that there's a couple of things that have been used to hit Bitcoin with a stick over the years, right? One is that people say that Bitcoin is centralized because all of the miners are in China. This has been a great opportunity to actually distribute some of that mining throughout the world. So, you know, long term, then you can say, well, actually, it's not centralized because we've got all these, you know, mining facilities, situated all over the world. So I think, and the second thing is, again, which we can talk about in more detail, is the environmental factor, which has obviously been a lot in the media in the last couple of months, which has caused lowering the price too. So China was also the lead culprit for using dirty energy, such as coal, for Bitcoin mining. So I think long term, if the mining goes over to countries with more renewable energy sources, I think it could be a net positive for Bitcoin, but with some, which is going to cause some volatility along the way. But I think it could be good for Bitcoin long term.
Oh yeah, I definitely agree with that thesis. We take a lot of power. Decentralization, that's a very long conversation. I'd rather not have. Because yeah, there are a lot of tech people who would say, you know, it depends on the type of decentralization you're looking at. So too complicated. Yeah. But yeah, in relation to price, it's It's interesting, right? Because the break-even point used to be about $25,000, and it took you about 24 months or maybe 1.5 years to break even in your mining equipment. Is it going to be less for the foreseeable future? I don't know. I really don't know. It's complicated, man.
Yeah. Well, I think in terms of mining, actually, it's been, if you're not from China, you're not a miner in China, it's actually been really good for the miners in other parts of the world because it's become easier to mine Bitcoin and get mining rewards. But yeah, I just tend to think that what's happened shows more robustness of Bitcoin, that you can be, you can have such a large amount of mining come offline and still be, okay, there was a drop in the price, but still be very robust and very resilient. And it just shows that you can just set up in other parts of the world. And really it is just the battle of mining is just the battle of electricity costs and profitability. So if China decide to put regulations, okay, it's going to hurt, but they'll go to a country which has more friendliness, more regulation friendliness.
Yeah.
So yeah, I think
it's not US.
Yeah. Sorry, say again?
It's not US.
It's not US, yeah.
Yeah.
I think Stephen mentioned a very good point about the fact that how crypto has shown itself to be robust. I mean, I was watching this Cathie Wood interview where she said that the crypto market fell from about 2.5 trillion to 1.5 trillion. So it lost almost $1 trillion. And the world still continued. And I mean, the crypto economy also still continued. But if we had that kind of drop in, say, the normal financial system, there would be complete chaos everywhere, like what we had in 2007 and 2008. So, I mean, I think crypto has shown some robustness. But then I also have this concern. I mean, the narrative around Bitcoin was that it was a store of value. At least that's the more recent narrative. But when you see something drop 50% or more, you don't see gold, which is normally called the traditional store value, drop 50%. I don't know if gold has ever dropped 50% or more. But you see something like Bitcoin drop 50%. Can it still be called a store value? What do you think?
I think yes. Because I think what we're trying to compare, we're comparing an 11 or 12-year-old technology with something like gold, which is what thousands and thousands of years has been used as a store of value. So I think it's a maturing process. And if you actually look at Bitcoin over the last 11 or 12 years, okay, there are periods where we have these boom and bust cycles, but overall it has been going up in price. I mean, even if we look at the beginning of the year, we're still up a lot more than we were. Okay, we've gone down from the high, but we're still up a lot more than we were at the beginning of the year. So I think it has store of value properties in it, which make it obviously scarce. And I think that the demand for it's going up generally. I just think that with a new asset, you're going to have to deal with volatility. And volatility to me is not people use volatility as a negative word, but we all need volatility in financial instruments to be able to make good investments. And I think there is some volatility in Bitcoin, but I think that volatility will reduce over time. But we're talking about a 12-year asset. So yeah, I think it can be called a store of value property.
Yeah, I think I'll add to that. I think I can't remember which country I was reading about, but refugees were fleeing the country and they were just buying gold rings to put on their fingers and just traveling across the country because they knew they could sell the gold ring. Now you can travel basically most countries in the world and they will accept Bitcoin. So it is a good medium of exchange. A store of value, I definitely agree with you. It's too volatile right now to be a store of value. Maybe Stephen's right, in 12 years' time that may be different. But yeah, it's interesting that you can go around the world with this single hardware wallet and transact anywhere.
Yeah,
I think the El Salvador experience will be interesting to watch.
Oh yeah,
they made Bitcoin legal tender there, right? And it's not a very rich country. In fact, it's the murder capital of the world, I hear. But I mean, it'd be interesting to see if this experiment succeeds in El Salvador. And if it does, maybe a few other countries who also have problems with hyperinflation may also decide to adopt Bitcoin or other cryptos.
Yeah, I agree. I think it's a totally different narrative on El Salvador, which is great, to be honest. So El Salvador, obviously, they've recently just made it legal tender. But in the country, El Salvador, you know, only 20% of people actually have bank accounts, right?
Oh, wow.
Which is absolutely insane. So 20% of people have access to the financial system, right? So that means that everybody else is dealing with cash or other mediums of exchange, yeah? So this is, for the first time, is allowing people to be able to participate in the financial system. Yeah, a new financial system, but a financial system. And what I found really was amazing was that the president of El Salvador's actually airdropped, I think it was $40 of Bitcoin to everybody in the country. And this is actually a really good trial, because everybody always sees Bitcoin as a store of value, like we were talking about, put on treasury reserves or to hold over the long term, like you would hold gold, etc. But there is also another narrative around using it as an everyday currency, and it hasn't been possible to do that, you know, with the Bitcoin fees being quite high, transaction times being quite slow. But by you know, I think that they're using something called the Lightning Network in El Salvador, which is a second, I won't go into the details, but it's a second layer solution, which makes the fees lower and speeds up the transaction costs. So I think this is a great testing bed in a country that needs it, that doesn't want to be reliant on the US dollar anymore. And I think we're going to see South America adopt it first. So Peru have also just put in a bill to potentially have Bitcoin as their legal tender as well. I think everybody's, I think all these South American countries are really fed up of being under the control of US, under the control of the US dollar and the current financial system.
Sorry, can I bring this up? I just want to open this to the floor. I think the reason, part of the reason why crypto fell so much is people have just lost interest.
Yeah.
I was looking at the transaction rates of Ethereum, because I do some work on Ethereum, right? It used to be $75 to do a transfer. Now it's $4.
Yeah.
There's nobody transacting on the network anymore. I think it's just, everyone's just moved on, you know?
I think a lot of the new people, they kind of FOMO, fear of missing out. When the price go up to 60,000, they want to chase the
I look a lot. I don't know about you, Zach, in your everyday work, but I look a lot at on-chain metrics. And I think what the on-chain metrics generally say over the last couple of months is that many of those speculators who came into the market and had been told by their friends that, you know, Bitcoin was going to go up very quickly and they were going to become millionaires overnight. I think either those people came in at the top and got scared and sold, or they took their profits from the year and then they've come out of it. And I think a lot of those Bitcoin or crypto in general have actually been transferred over to the more experienced or the longer term hodlers.
Right.
And I think so. I think there's generally less transactions on the network, which is obviously reducing the gas fees or the transaction fees. But yeah, I think in every cycle, the amount that a network is adopted is based, you know, a lot of it's based on the price. So I think it's typical that as the price goes down, that we do see less of the newer people involved.
Yeah, I'll just say that I'm not very sure if the transaction prices is the best way to judge the interest in crypto, because ultimately Ether does want to reduce its transaction rates, and so transaction rates will go down. But I remember seeing this article about the number of wallets, and I think recently I saw that the number of wallets holding Ether has increased while the number of wallets holding Bitcoin has decreased. So that may show some, decreasing amount of interest in Bitcoin and maybe more interest in some of the altcoins like Ether. And I just say that I also think that DeFi, the use case for DeFi is still as strong as ever, because you want a decentralized exchange where you can do all these financial services. So I don't see that diminishing in the near future.
Yeah. Well, I do think in this early stage, and I think a lot of the viewers of this video will be saying, well, Bitcoin's going down, but when Bitcoin goes down, everything goes down. And I think that's a key point to note. And it doesn't mean that these projects don't have their own use cases and they don't have their own niche or their own future. But I think Bitcoin is almost a gauge of the interest in the whole crypto market. So when Bitcoin goes down, all the other projects tend to spill blood as well.
Can I add one thing? So I agree with everything you said. Indeed, I own a Bitcoin and other cryptos myself. One thing that is still a problem for larger adoption of Bitcoins in daily use is the very high exchange fees from the crypto exchange. When you deposit money, when you buy Bitcoin, you always pay a lot of fees that are very high. Then once you have Bitcoins or Ethereum or any others, maybe you can transfer from one wallet to another one across the world for quite cheap and very quickly. But the problem is when you transfer from fiat to cryptos, that is usually very expensive. And until we are not gonna see more competitions into crypto exchanges, that will bring the cost of fees down. People cannot use it for daily use because doing this for fiat is still better. For instance, I can make an example. I want to transfer from Singapore to somewhere in Europe, $20,000 or make some payments in Bitcoin. Even here in Singapore, I cannot, but let's imagine I will be allowed to do that. I will have to take my credit cards or something and deposit money in my crypto exchange that usually has already a 1 to 2% fees. So 2% of your value is gone already, which could be a lot.
Yeah.
And then once you have US dollars in your crypto or like Singaporean dollars in your crypto exchange, you want to buy Bitcoins, and that's another 2.5% exchange fees that you pay. So you lost already 5% of your initial values, and you still have to buy anything. So there could be solutions to that, but they will take time before we can actually use them.
Yeah, I think it's a maturing industry, and I think you're right. There are a lot of barriers, to not only onboard to crypto, but obviously offboard back to fiat currency as well. I think the exchanges are charging quite a lot of money in terms of spread fees and fees. But again, it's an industry and a maturing industry, which I think will have more and more competition. As you have more competition, there's more competitiveness on rates, etc. So I think over time that will get better, but it will take some time. Yeah.
I think I'll just touch on that a little bit. So I think Visa said that they've seen a lot of crypto transactions recently. And it doesn't cost a lot to use your Visa card, to be honest. Like if you just buy off Binance we call them ramps, right? On-ramp and off-ramp.
Yeah.
The on-ramp of crypto, it's you can just go Binance Singapore if you're whatever, $30,000 a year limit or whatever, 0.6%. Off-ramp on Visa and MasterCard, I think it's like 1.5, 2, depends on which exchange you use and things like that. So it's not great, but it's not terrible. Not yet anyway.
2%, yeah. So yeah, if I have to buy something, I prefer to buy something that is 2% cheaper than.
Okay, anyway. I actually want to touch on one more subject before if we're gonna end this soon. Robinhood IPO, anyone's got any opinions? Value investor Amar, you got any opinions?
I'm more interested in I'll just say I'm more interested in the eToro IPO.
Yeah.
It's actually a SPAC. It's a SPAC, and I think it will be listed in the third quarter. I think it has some unique competitive advantages. I mean, it has popular investors like us. Robinhood doesn't have that.
I think the trends are going towards this type of investing. Investing on the internet, these social investing. I think this is the future. But I think a lot to me of whether I want to be involved in Robinhood, and a lot of it will come down to the valuation.
And there are so many apps for investing today, like so many. It's hard to assess all of them. So unless you are like really into these markets and you know how to assess each of them, I don't know. For me, it's hard to say whether it's good or bad.
I'm actually invested in another one, plus 500. It's
plus 500, yeah.
Yeah, it's on eToro. I think it's plus. I think is the ticker. But it's another Israeli company, but they're on the UK stock market, and all of them actually, including eToro, plus 500, Robinhood, they're all showing growing account numbers. So I think the theme is more and more going over towards it.
I just saw plus 500. The metrics look amazing.
Yeah.
The dividend yield is 9.62%, PE ratio 3.7.
Yeah. Yeah.
Oh, wow.
I've owned this one for a while. I think it's good. I owned this one before the eToro SPAC listed. But yeah, I think their growth is. I think all of their growth is going to be amazing. I think I don't think it's a winner-take-all market either. I think there's a lot of growth, pockets of different growth in geographical regions. I think there's enough room in the market for them all to be successful. Because Robinhood is more focused on the US than eToro and other apps.
Yeah.
Okay. The last question I wanted to ask someone as well, to do with crypto, just before we move on, is does anyone, obviously there was a big narrative towards the beginning of the year about institutions getting involved in Bitcoin to have it as part of the balance sheet. Obviously we saw some quite good institutional interest at the beginning of the year, and then that was obviously put on the back burner a little bit because of the concerns about the environment and Mr. Elon Musk making comments to do with environmental concerns. Yeah. Do you have any thoughts on that, Zach, or on the whole institutional uptake of Bitcoin or crypto in general?
I mean, I would caution people when you go into the space, which is the game is very different, especially when it comes to institutional investors. Institutional investors look at high frequency trading, arbitrage, and those are games that we cannot play. Yeah. Even on eToro we basically cannot. Off eToro, it's still really, really hard. You gotta be really good to be able to play those games. So I wouldn't I don't think it should affect people on eToro, especially in terms of investing. We are limited in the scope of things that we can do. Even I think Amir is very good at options trading and things like that. We can't do those things on eToro. So in the same way, I wouldn't let the institutions kind of affect you too much. The game is just very, very different. But definitely, I would say micro strategies and all that, they came into Bitcoin around 20-ish thousand. There is a lot of interest at 20-ish thousand. I think that's the reason why Bitcoin can't go down any further, is because of companies like that. But yeah, it's just my opinion. I'm not very sure. Too hard.
Yeah, I think just some of the things that I've heard in the market about institutional interest. So obviously there was this kind of snowball that started with Michael Saylor, right, and MicroStrategy, and putting on the balance sheet, and then Square got involved, and then Tesla got involved, and they started putting this on their balance sheet, right, and they saw nice gains. What I think happened along the way, which slowed it down a lot, was these environmental concerns. Mm-hmm. Because what I've heard from a lot of people in industry, hedge fund industries and other areas, was that in order to be able to get approval for, say you're a hedge fund or a pension fund, to get approval for that investment in Bitcoin, most of these hedge funds, etc., they have something called an ESG committee, which is an environmental committee that isn't involved in the financial decision of if it's a good trade.
Right.
Is it an ethical trade? Yeah.
Right.
And I've heard that there's been quite a lot of stops with these ESG committees where they've said, okay, you know, we can see the financial side of it, but we want you to prove that over a certain percentage of that is mined renewably. And I think that there's going to be more and more focus on the environmental factor. Because I think with bonds low and it being a scarce asset, I think it's a great asset to actually have on your balance sheet. But I think environmental factors have slowed down the institutional adoption. But I think they're doing things to make it more renewable. So I think those will eventually move out of the way. Yeah.
And I think they set up the council, the not American, the Bitcoin Council, to tackle the ESG problem.
Yeah, that's true. I think it was Michael Saylor. I think was. I mean, it's Bitcoin, so it's supposed to be decentralized, right? No one runs the mining committee, but I think he set it up with a lot of the other big mining companies throughout the US and a few other places. So I think they're working on it, but I think they're going to have to prove that more and more is being done renewably, and then they've got a more chance of unlocking the gates. Yeah.
No, I think there's a great article by a guy named Andros Antonopoulos. I'm not sure if anybody's heard of him, but he was comparing the mining cost of or the environmental impact of the Bitcoin network versus the environmental impact of the banking system. And he's basically saying, yeah, Bitcoin is not that bad if you think about it.
I think so. But to be honest with you, it just shows how manipulated the market is, that these things come up when the price is really high. And you can see that there's a lot of factors coming into play with people shorting at the tops. And that's the thing. When you have institutional interest, the smarter money knows how to play the market.
Yeah, I would throw this out there for all of you to laugh at me, but let's just try it. Think about how much Elon Musk made when he tweeted, "I'm going to accept Bitcoin," and how much money he made when he changed it to Dogecoin. Just think about that. Just think about it. I'm not saying anything, but just think about it.
I think you are. I think you're right. Yeah. Okay, so I think we'll leave crypto there because I think we've talked about it pretty extensively. Amar, I think you wanted to talk a little bit more about technology and antitrust.
Yeah.
Do you want to have a couple of minutes on that?
Right now, it seems like all the major economies in the world, the biggest two at least, want to kill their biggest and most profitable companies. China wants to kill its biggest companies, and the US wants to do the same, it seems. So, I mean, there are a few antitrust bills going on in Congress in the US, and that might cause a lot of complications for some of the big tech in US. I think M&A is going to be stopped for a while. There could even be a threat of a breakup. Even Donald Trump is suing big tech. Then there are other developers like Epic Games who are suing Apple and Google. So it seems like it's quite a major concern for society at large. I'm a little bit more worried about China big tech because that seems a bit more unpredictable and a bit more, the regime there seems to be more authoritarian. So at least in the US, recently Facebook won a lawsuit against the FTC, which was trying to get it to divest Instagram. So I'm not sure if you can challenge decisions in the Chinese courts if you don't find that they are, right or they should be enforced. So I'm a bit more concerned. So that seems to be the big question now also, because Chinese stocks have fallen a lot. So should we buy big tech China? So maybe I'll ask some of the other panelists, what are your views? Do you think it's a good opportunity to buy?
I bought it. I already bought it.
Okay.
I was invested before, and yesterday I bought a bit more. I bought it through the IEMG index and also individual stocks as well. I think the valuation went so low that even if you consider the risk of being breakdown by the government, it's still good. You're like, they are trading at some of them at a PE ratio below 10. Even at the biggest one and fastest growing one like Tencent and Alibaba, they have a PE ratio of 20. And actually for Alibaba, the PE ratio it's 20 just because they had to pay a very high fine just a few months ago. Without that one, PE ratio will be even lower.
Yeah, it was over 2 billion, wasn't it?
Yeah, something like that.
Yeah. I think it's actually amazing what's happening. Did you know you bought some Alibaba? Did you on the dip?
Not Alibaba, because I already have like 5% of that in my portfolio. I bought Baidu and IMG. A few weeks ago, I bought Xiaomi. Yeah, so those are the one I bought. Let me check.
Tencent?
I already have that one, so I didn't want to increase it further.
I added a little bit to my Alibaba and JD.com. I haven't gone too crazy, but I've been slowly nibbling away because I think the valuation is good. Yeah, I think it's quite important actually, maybe for the viewers, that we try and explain a bit of the context around China and what some of those threats are. So obviously, I think over the last maybe 7-8 months, there's been a lot of kind of clampdown again with the Chinese government around tech companies in China as a whole. So it actually really started off with Alibaba, where they got in trouble for, I think they called it monopolistic practices. And they were actually given I think it was $2.2 billion fine. Someone can correct me on that if I'm wrong. And actually, since then, they've actually got together with all the large tech companies in China and laid out new regulations in things that they have to go through. And they've also given out a lot of different fines, smaller fines than Alibaba, but fines to a lot of the companies. Last week, there was also the big Didi IPO, which happened, which to me seems as shady as you can possibly get. Because I welcome all your thoughts on this, but I think there's absolutely no way that a company has not got an idea that 1 week later they're going to be banned. People are going to be banned from signing up for the app after 1 week after you IPO. So to me, this just sounds completely shady. Any thoughts?
Well, it's not the first time that there is something stodgy happening with Chinese stocks listed in the American market. There was Larkin Coffee. What was the name? Yeah, just a year ago. So it's not a surprise. But that's another reason why to not invest in IPOs.
Yeah. But I think it with China, I think it justifies paying a lower multiple because of these regulatory risks and because of these risks that you face from potential accounting practices or whatever. It's different from the US. Yeah. But to me, I think that there is a risk there, but I think there's a lot of upside. And you've got to think from a government point of view in China. Okay, they want to control it, but they also don't want to stop their tech companies from growing. So I think it is in their best interest as well. Eventually, once they've slapped enough companies on the wrist to let them practice again.
Yeah, and they need to compete with Americans companies. So if Alibaba gets slowed down and Amazon doesn't, they will lose market, especially in Europe or things like this. That I think it's where they can, both of them are trying to compete probably. So they don't want to lose other markets. So probably at some points they will have to let them doing some things. But I guess that even in the worst case scenario, that what can happen, yes, they can have a fine, but the worst case scenario is probably they have to be broke down into separate companies. Is that so bad, or can we live with that? Because imagine that Alibaba will have the cloud computing one company and e-commerce in another one. Is that really bad, or
Depends.
or could actually be good? Because maybe sometimes company that focus on a single product can gain advantage and do even better.
Yeah,
We've seen even Americans company doing this. So in any case, I don't see the worst case scenario. It's not that bad for me.
Yeah. There's one other scenario that I think is worth bringing up that could happen, is that there could be more and more focus on Chinese companies being able to list in the US under the ADR process, etc. So there could be more and more scrutiny on Chinese companies listing in the US because of this, because there could be a lot of cases that is potentially defrauding the US investor population. So I think there's the risk of new companies being able to list on the NASDAQ, for example, but I think there's also a risk, and I don't think it's a high risk, but I think there's a risk that potentially some of the Chinese companies on the NASDAQ could be reviewed and be subject to harsher scrutiny, and some may get delisted. There's always that possibility.
Yeah, I think the people were discussing this like a few months ago, even still with Trump administration. Everyone was scared about that, but then they stopped to be scared, and Chinese stocks went up a lot, and then they started going down again.
I'm less worried about this actually under Biden than I was with Trump. Yeah, it's just something. I guess it's something just for viewers just to consider that. Yeah, I think there are a lot of upside opportunities with the Chinese stock, but it is higher risk.
I think it's a good idea to invest in Chinese company through the Hong Kong listing rather than the US. Yeah, it's safer. Yeah.
Yeah, there's definitely an argument there for that, because obviously Alibaba and JD.com are both dual listed.
Yeah, I'll just say the one thing that will give me a lot of comfort is if some of these Chinese companies start buying back their shares, because their shares are quite severely undervalued in some cases. So if they show to the market that they are confident that their shares are undervalued and they're buying back, that show me that their management is honest and also puts their money where their mouth is in backing their companies and their stock.
Yeah. But I think the whole Chinese play just comes down to regulations and how strict they're going to be on regulations. I think if you just look at the trends in China, there's more and more people going towards e-commerce. More and more people want to use internet-based services. So I think the markets are growing. The growing markets there. It's just how tough are the Chinese government going to come down on these companies. So yeah, watch this space, but that could be a good interesting second half of the year.
Yeah, sorry, I will say one thing as a Chinese person, and that's my only opinion on it. We are very communal in the way where we think. We are very, as a group, we don't have individuals. Individualism is not high on, I can't remember the scale, we're not high on individualism. So generally, as a rule, we won't let a single company rule the entire nation. I feel anyway, as a CCP. But yeah, I think the breakup is inevitable, and there should never be hero worship in the Chinese kind of base, whether that's good or bad or whatever. That's up to you to decide. But I just don't think that's going to happen. You're not going to have one or two very big companies in China, unless they're sovereign owned. I'll have to say that.
Yeah, I think you're right there. But again, that just shows that there's more room in the market for multiple players rather than the Amazon type situation that you have in the US.
Exactly. Stephen, have you lived there, by the way?
Yes. I
have, right? Yeah, you understand it.
I lived in China for about 5 years. Yeah.
Yes, it's different, right? I mean, it's just the way that they think, the culture, the way they approach things. It's just different.
But do you think that as China becomes richer, people demand more freedom? And I mean, I saw that in Singapore. Singapore 20, 30 years ago, I think it's quite different from what Singapore is today. I mean, the youngsters today definitely want a bit more freedom and even political freedom. Do you see that happening in China as well in the future?
I'll let Zach answer that because he's well
no,
played.
Stephen, go for it, man. Go for it. You've stayed there. You actually have a better opinion than me.
Yeah, I'm not ethnically Chinese, but yeah, I know how it works. Yeah, I think there is a more. I think first of all, it's demographic based. Yeah, so I think in China, the younger populations are more and more edging towards having a little bit more freedom and being a little bit more traditional. Also depends on what part of the country you're in as well. So like Shanghai, Beijing, not so much Beijing actually, but more Shanghai, Shenzhen, places like that. A lot more modern, in touch with kind of Western cultures, etc. So I think there is a trend, but it's a slow trend, and I think it will change as the demographics of the country change over the years. So yeah, I can see that, and we can see that as well from there's still a traditional side to China, but you can actually see a huge demand for foreign products. So when people think of China, they always think things being made in factories for cheap and being sent over to the US to be sold. But there's actually a massive market the other way now for foreign luxury items, especially being consumed in China. Yeah, so it just shows that they're kind of opening up to this kind of more modern world and open to new ideas. But there's always going to be underpinned by a traditional value. Yeah.
I'll respond to that by saying I agree with Stephen. Demographics is a huge thing. And if anyone's interested, I'll ask them to look at the laying down movement in China.
Right, guys, we don't have too much longer. I want to try and keep this within time. Just before we wrap up, I thought we'd just do 5 or 6 minutes just to have a little bit of a discussion. So we've talked about what's happened this year. We've talked about some of the key elements that are happening in the market. Thought it'd be pretty good to talk about potential tailwinds and risks for the second half of 2021. So is there any areas that kind of people are looking at or focusing on for the second half of this year?
Last time I came on, I think I talked about the US dollar. It's done a little bit for me. It's done pretty well for me, actually. So I think the US dollar is going to continue correcting. I don't think there's going to be major US dollar weakness. I don't know about you guys, but it's just my opinion.
It depends on the interest rates, right? They said they're going to raise interest rates in 2023. So if interest rates go up, the dollar will go up. So it depends on the timeline of when they are planning to raise interest rates, I think.
Yeah, it depends what you're trading it against as well, right? So yeah, I think what you said on the Canadian dollar, I think the Canadian dollar is likely to be weaker than the US dollar. So that should strengthen against the Canadian dollar. The one trade I do have actually, which is for the US dollar, is I have a US dollar Turkish lira trade.
Well done there. Which side of that trade are you taking?
I am taking the US dollar side of the trade.
Your carry costs are insane.
But it's really been like the thing is with the Turkish lira is it's just structurally just set up so wrong, and the president just has way too much control over over the the Reserve Bank in Turkey, and yeah, he just continues to make the wrong moves. And when the people in the central bank don't listen to him, so when they say, okay, we think we should do this in order to strengthen the Turkish lira, he says, well, I don't agree with you, and he just sacks them and then puts someone else in place. So yeah, I think that's going to be a good trade.
Other one is an interesting character.
Yeah, but yeah, what about in terms of kind of themes? Is there any themes that people are looking on that they think will be particularly strong in the second half of the year? Amar, anything?
I'll say that I think China big tech can recover. I think the government will see reason at the end of the day, because these companies need to be globally competitive, so you can't hurt them too much. I think we might see a catalyst when the Ant IPO finally does its IPO. That might restore more confidence for these China companies.
So China's your kind of big focus for the second half of the year.
One of the focuses, yes.
One of the focus. Simone, any kind of things that you're looking on that you might adapt your portfolio, or something you think might be strong in the second half of 2020?
So for adapting my portfolio, as I mentioned before, I bought the deeper in some of the areas that were being heavily affected by recent events. So Chinese tech stocks and biotechs. But what I'm also for the future, what I'm expecting, I think one thing that I'm expecting is that reopening is not going to be as fast as people think, and that is good news for the tech stocks, bad news for everything else, and also for people. But typically, when I think about future outlooks of my stocks, I don't focus on what is going to happen on inflations or US dollar or macroeconomics areas. I usually set up milestones for the companies I have. I can make a few examples. So I have a few investments into early cancer detections with liquid biopsies, and those are estimated to finish clinical trials over the second half of this year. So I'm looking at those, and it could be a big jump if they manage to get approval.
Which stock is this? Sorry, Simone.
These are Exact Science.
Okay.
And another one should be Grail, but Grail was bought by Lumina. The acquisition is still pending. So the acquisition of Grail by Illumina is another milestone I'm looking at. So I'm looking at this clinical trials. There are other companies running some clinical trials that should finish soon, and I'm looking at those. And for tech stocks, one thing I'm looking at is the acquisition of ARM by NVIDIA. That will be a major change in the market of semiconductors. I'm looking at the adoption of gaming, cloud gaming, with so that is something I'm really bullish. So I want to see how that market is going to gain traction. So these are the things I'm looking at when I'm thinking about the future of my portfolio.
How are you playing cloud gaming, Simone? What stock or asset are you using?
Okay, so cloud gaming, Microsoft did huge acquisitions so they already have a very big cloud gaming, a cloud infrastructure. They made some acquisition for gaming in general. They bought Discords, they bought few gaming developer company as well. And the P ratio is not too high for Microsoft yet, and they are also going to release Windows 11 soon. So these are very interesting things for me to pay attention to, and I'm very bullish in all of this. Another one, cloud gaming. So Amazon, Google, they have a pretty good cloud infrastructure as well. They are running a little bit behind in the cloud gaming parts, but that's still something still in the portfolio if you want to invest in cloud gaming.
Okay.
Yeah, so these are my milestones for the next few months.
Excellent. Okay. Thanks for that, Simone. Just before I move on to Maverick, I actually noticed something the other day in Zach's portfolio, which I just remembered, which I thought might be good to talk about. I noticed that you had a quite big position in Russia. Is it a Russian ETF? Is there anything behind that move?
It's a valuation play. I think I mentioned this in my last webinar, which I did with eToro. It was at the time I was looking at it, US PE ratio was like 26. Emerging markets was around 16. So Russia was 9. So if you guys want to look at that, that's really interesting, just from a relative value kind of play. But yeah, that risk, so it's not a huge portion of my portfolio. I think it's like 10%, which I don't think is large.
Yeah, large-ish.
Large-ish. I mean, it's a basket, right? So it's fine.
How long have you held that one for?
Oh, let's see. Give exact dates. A couple of months, I think.
Okay.
Yeah, a couple of months.
Cool. All right. No, I just found that one interesting when I saw it. So just wanted to get your reasons behind that. Cool. So Maverick, over to you, my friend. Anything that you're particularly looking at for the second half of 2021? Any sectors or any types of stocks that you think are going to do well?
For the second half of this year, I think this China tech stocks, China tech company is quite undervalued now. I think it's a good potential to go up, and also the crypto.
Oh, you're buying the dip, are you?
Yeah, I bought the dip, and they keep dipping.
Did you buy the dip of the dip?
No, actually, now my portfolio is almost 100% used up, no more cash. So yeah, I think the second half, the crypto space, they will recover. Yeah. That's what my opinion.
Maverick, do you think there are any like catalysts for the recovery in crypto? Any particular catalysts? Like maybe Elon Musk buying more Bitcoin or something?
Elon Musk. No comment on Elon Musk. But I think overall, general, I think Bitcoin will recover. Yeah.
Okay.
Stephen, how are you seeing Bitcoin?
How am I seeing Bitcoin?
That's last word for you.
Yeah, I'm generally bullish on Bitcoin as a whole, but I think I did think that it was going to take a bit of time for it to recover after all this Chinese stuff and the environmental thing. So I don't think it's going to be a really fast turnaround, but I think that it's going to recover. I think they're going to start to make more and more inroads on the environmental factors, which should give some confidence to the institutions again to get a bit more involved. I think the hash rate situation will sort itself out as more and more miners move around to different geographical regions. So I'm expecting July. I think we're going to probably range in July in this range that we've been in from 30 to 40. But I think that there's a lot of seller exhaustion. So all of these speculators that have been in the market and have been, selling off their Bitcoin, and they've gone over to stronger, more hands with more conviction. I think that there's going to be a seller exhaustion, and I think then some of these long-term holders are going to own more Bitcoin and less likely to sell. And I think that there'll be some buying pressure. And it's always a chicken and egg situation. So once the price starts going up again, then once that floor's found and then the price starts going up, then speculators will pile on again. And so to cut a long story short, I think probably from August onwards, I think we're going to start to go up again.
All right.
I think so for crypto and Bitcoin, so one of the important milestones will be end of July. I read that Elizabeth Warren gives SEC deadline to end of July for come out with a regulation of cryptos. So that one could be good and bad. We don't know. Depends on what type of regulations will be put in place.
Yeah.
But that is one date to keep in mind where cryptos can make a big move.
Yeah, I think so. I think one thing to look out for, and it's a subject that's been going on for years and years, so it's not like it's going to happen next month or whatever. But I think when the Bitcoin ETF in the US is eventually granted, there's going to be an explosion.
But now there is a lot more push. So now with Gary Gensler as SEC president, and also the new Biden administration is pushing more into regulating cryptos, and more institutions wants to invest in cryptos. So they are pushing regulators to come out with clear guidelines of what they have to do. ARC wants to make Bitcoin funds as well, so they need to regulate it sooner rather than later. And I'm expecting that this will be happening soon now.
Yeah, I think so. Yeah, I think these ETFs are interesting, a way for institutions to get involved, but also this kind of grayscale trust, these other ways for people to get institutions to get involved in Bitcoin without custodying. So yeah, all to look forward to in the second half of 2021. And
I'm expecting volatility.
That's the one thing you can expect.
Yeah,
volatility. Okay, I think we'll wrap that up there, guys. But I think that was a really great discussion, and it's really great to get all your inputs and your views on what's happening in the market. And I think we should make this a regular, or keep making this a regular thing, and try and do this once a month.
Yeah, sounds good.
Great.
Perfect.
A good idea.
Thanks, everyone. Thanks for joining, and thanks to everyone that listened to this. And
thank you, everybody.
we hope to come back to you all soon.
Yeah,
See you, sir. Bye.
Take care.
Okay.